Hello, everyone. Thanks for joining us today for our free educational presentations. Now, today I want to talk to you about probably one of our most popular as well as consistent methods that we have been teaching for decades now, and that's the dynamic duo of trading. It's two edges that, when used and applied together, really increase your odds for consistency, trading any market and any time frame. Let me give you a brief example right here. Let's look at this chart in GILD, G-I-L-D, okay? This is why a lot of traders fail and lose money, because they don't have any clear idea of what to do. They think the market's going up the way it looks right here, and then all of a sudden it changes courses and goes down. Well, the dynamic duo is made up of two highly consistent edges. Now, the first edge, if applying the dynamic duo to GILD, actually generated a buy signal, even though it looked as if it was going lower. Okay, so it generated a buy signal actually right here. And the second edge actually confirmed that signal, because we know that not every signal works. It doesn't matter what method, what account you have, how much money you have, how many systems you're trading. We all know that nothing works all of the time. So you need an edge to at least increase your odds for consistency. So when we have these two edges together, we really have a high probability setup. And had you taken that signal in GILD just a month or so ago, you could have potentially captured 20 points in a matter of weeks. So this is what we're going to be talking about today. This is the topic of today's educational presentation, the dynamic duo of trading. Hello and welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading, and I've been trading now going on roughly 48, almost 49 years, if you can believe it. I teamed up with Pro Trader Strategies roughly about 15 years ago to just simply educate traders and to teach traders. And as you can see here, the PTS Primo Charting Platform is one of the ways in which we educate you. It's a trading platform I developed with Pro Trader Strategies that actually teaches you how to trade. So as I stated, I started my career roughly 50 years ago on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. I made markets in roughly about 50 or 60 stocks during the crash of '87 and the bull market that followed. So in my nearly 5 decades of trading, there's one thing I've learned. I know what works in terms of consistency, and I know what doesn't work. Unfortunately, most educators, so-called educators, and websites you go to are teaching you things that have been around for a long time. They've just been reformatted, rebranded, and they really don't have a high level of consistency. So I developed Specialist Trading just with one goal in mind, and that was simply to teach traders how to trade. Because if there's another thing I've learned in my nearly 5 decades of trading, it's that you will never be a consistent trader unless you make your own trading decisions. That is really the cornerstone behind all of our education at Specialist Trading. We want to give you all of the information, but so that you can make your trading decisions. Not me, not some guy in a chat room, not some announcements that's supposed to come out later on in TV. You should know what you want to do regardless of those things. And I'm happy to say that we've taught students around the world in over 115 countries in every state in the United States how to become consistent traders using our methods. And you'll see that today with one of our most popular as well as powerful methods with the dynamic duo. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying the dynamic duo, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And since we are only an educational company, all examples are strictly for educational purposes only. Now, we always let you know there's ways to get more information and education on a daily basis if you like. Firstly, you can follow us on X, formerly known as Twitter. There's our handle right there at SPCLST. I would recommend copying that down, because every day I post between 5 or 7 or 8 different snapshots of signals that have currently been generated by our methods, and little bits of financial wisdom as well. So there's lots of great free information on a daily basis with X. Also, if you'd like to see more of this content, please subscribe to us on YouTube. We know there's a lot of people following us on YouTube right now, so that we'll have more of this on YouTube. Please hit the subscribe button and you'll see a lot more. So 2 different ways to follow us and to see more of our content and education. Okay, with that stated, let's begin today's educational presentation. And we're going to be talking about what we stated earlier, the dynamic duo of trading. So what exactly is this? Well, it's two fantastic edges that we have that we discovered actually when we first started teaching through our students, that when they're applied together, they really increase your odds for consistency. So what's the first edge? Well, it's strategy number 4. I talked about this just last week. Strategy number 4 is a fantastic method I was first introduced to on the floor, the very first strategy I started trading. And guess what? I still continue to trade with it this day. Traded with it this morning, intraday, and had about, I said, four signals. 3 of them were winners. 1 was a break even. So it's a fantastic method. And let me share with you some of the highlights. It's based on a pattern. It's a pattern recognition strategy that looks for this pattern that we can repeat in any market and in any time frame over and over again. Now, guess what? I'm going to be sharing with you the first 2 rules of strategy number 4 today. It's designed for traders looking to catch momentum. Now, when I first started using it on the floor, I was in and out in a matter of minutes because that's the way you used to trade on the trading floor. But we've developed ways in which to stay in the trade if you'd like, for days, weeks, even months if you'd like. Now, it only uses one indicator, and I'll share with you once again what that is in just a few moments. All right, here's rule number 1. Buy or sell signals can only be entered either above the 50-period moving average if it's a buy signal, or below the 50-period moving average if it's a sell signal. In other words, we want to be in sync with what we call the buy-sell line. That's a 50-period moving average. So if price is above the 50-period, we will only be looking to identify buy signals. If price is below the 50-period, we will only be looking to sell strategy 4 signals. Okay? So as we can see here, price is above the 50-period moving average. So the overall trend is up. We only want to be a buyer if the overall trend is up. We never want to sell above the 50-period moving average. And when we say sell, sure, you can sell a position to exit with a profit or a gain. We don't mean that. We mean going short, betting that the market is going to go lower. And conversely, if price is below the 50, well, the overall trend is down. And if it's down, we only want to be a seller. We only want to have a seller's bias. Well, we'll be selling, in other words, to either go short or buy some puts, or we can choose to sit on the sidelines if the overall trend is down. Well, guess what? We're not going to be a buyer. Now, I know a lot of you may say, well, this is just too simple. I mean, gosh, below the 50 period, up above the 50. Well, do me a favor, go and look at the S&P 500 index, okay? Or the spiders, the S&P ETF that represents the S&P 500, or any major stock or market you're looking at. Look at Tesla. Apply the 50-period moving average right now to the daily market and see how this could have helped you. Let's say you were long the markets. Once it went below the 50 period, well, you would have known to maybe exit your positions, or maybe raise up your stops, or maybe sell half of your positions. Or if you were thinking about going long, well, maybe you would have stayed on the sidelines. Think about that with Tesla. What if you were long Tesla? And go look at the chart right now and see what would have happened if you were long and it was below the 50-period moving average, okay? So that's rule number 1. Let's go on to rule number 2 now. Buy and signal bars must close. If it's a buy signal, it must close in the top 25% of its range. Or if it's a sell signal, it must close in the bottom 25% of its range. Now, what does that mean? Well, if you look at any bar from top to bottom, from extreme high to extreme low, if you divide it by 4 separate but equal parts, that's either the top quarter or the bottom quarter. So as we see here, here are 2 bars that closed in the top quarter. And this went up. And as you can see, we had a sell-off here. Most students will say, well, Steve, yeah, but look at it, sold off immediately. Sure. But would you rather gone short on that, or take the next signal right here and ridden it all the way up? As we say, sure, there are every once in a while where there are some great selling opportunities to go short above the 50, but they're very short-lived. It's much easier just to go long and to look for those setups where price is above and closing in the top 25%. Now, the same thing works to the downside. Price is below the 50-period moving average. We have a bar here that closed in the bottom 25%. And look what happened, okay? How would you have liked to gone long then, right? These 2 simple rules I continue to use in my trading to this day, and I think they have sustained my trading. If you don't believe how powerful they are, paper trade with them for a while, and you'll be able to see that they really can help you turn your trading around, become consistent. You can even apply them to your current strategy. And I think it will really improve your results. Now, these are just the first two rules that make up strategy number 4. There are still 2 more left that I'm sorry, I cannot share with you. It wouldn't be fair to our thousands of students around the world who have purchased strategy number 4. But you already know the first 2, and let's look at some examples of how well this works, okay? Price is above the 50-period moving average. We had 1 day below, but it went right back up. So that's not enough to tell us that the overall trend is down. So now we're looking for bars now that close in the top 25% since the overall trend is up. And guess what? We have one right here. Now we know we have other bars that close in the top 25%, this one and this one. But remember, there are 2 more rules that need to be met. And unfortunately, these did not meet the rules, but strategy 4 did meet the rules right here. So this was a buy signal and 18 points in the following weeks, okay? Now, here's another setup, extremely important. We are above the 50-period moving average. So which direction is the overall trend? It's up. So that means we're only going to be a buyer, right? Now we look for rule number 2 for bars that closed in the top 25% of their range. Remember, top 25%, if you measure the range from extreme low to extreme high, if you close in that top 25, that meets rule number 2. Here's another one, extreme high right here. Here's another one. But remember, there are no signals there because they did not meet the remaining 2 rules. But this one did because it closed in the top 25% and it generated a buy signal. So let's say you're excited, you buy that, and then this happens, drops 50 points in the next week or so, right? At this point, you want to refund. You're saying, this stuff doesn't work. How come it didn't work? I thought I was supposed to be consistent and be a great trader. Remember, nothing works 100% of the time. I take losses still. That's okay. There's nothing wrong with that. That's almost like saying someone who goes to go to the plate in baseball will never strike out. All the great hitters strike out. That's like saying you're going to make a basket every time you shoot. All the great NBA players miss shots. Sometimes they hit air balls. That doesn't make them poor shooters or basketball players. It just naturally happens. So what you want to do is probably be able to increase your odds for consistency by applying edge number 2. And that edge is the PET-D. This is the second part of the dynamic duo. Now, if you're not familiar with what the PET-D is, it's a color bar tool designed to tell you the short-term trend with the highest level of consistency I've ever seen because it discerns what the short-term trend is on a tick-by-tick basis. For example, most people would look at this and say, okay, it's going up, but they really don't think you're in an uptrend up until we get about midway up here, and then they decide to buy. So for a few bars or a few days, you're thinking to yourself, hey, this looks pretty good, until all of a sudden it decides to turn and you're left holding the bag. Now you have a long-term buying position that you say, gosh, when did this happen? I thought it was going up. All right. Here's the power of the PET-D. On our platform, we make it simple. All you have to do is click on PET-D, and it automatically changes the bar's color to either green or red. Now, green means a series of green bars means that you're in a short-term uptrend. A series of red bars means that you're in a short-term downtrend. So as it says right here, the beauty of the PET-D is that it actually tells you which direction you should be trading. It's basically a translator. It's translating what the market wants to do on a tick-by-tick basis. And once you know what the market wants to do, what direction it wants to go, you can use that to confirm if your strategy is in sync with that direction. So you see how powerful this is. So now we have edge number 2, a short-term trend confirmation or a strategy confirmation, and a very consistent strategy. Now, when we combine these two, we have what we call our dynamic duo. It's a synergy of highly consistent setups and signals. So let me share with you the dynamic duo rules. Now remember, I can't go over the remaining 2 rules of strategy 4, but this is, if you are a student of mine in strategy 4, this is how you have a dynamic duo setup. Okay, if a strategy number 4 buy signal is generated, only trade the signal if the setup bar is colored green by the PET-D. That is your confirmation that that's a high probability setup, okay? So remember, we don't care what the bars are before the signal. We don't care what the bars are colored after. But the bar above the green arrow, remember, strategy number 4 generates a green upward arrow when it has a buy signal. The bar above that must be colored or outlined green. Now, conversely, if strategy number 4, sell signal is generated. We're only going to trade the signal if the setup bar is colored red by the PET D. Whenever the strategy generates a sell signal, it generates a red arrow, a down arrow. Now, the price bar below that must be colored or outlined red in order to sell short, in order to have that as a valid sell signal. Now, remember, once again, selling does not mean you can't get out of a position. We're talking about going short the market. All right, so let's go back and look at some of those setups we had earlier, okay? Here's the one back in ZS. We're above the 50 period. All right, we have a valid strategy number 4 buy signal right here. Now, remember, strategy number 4 is a very consistent method, but we want to take the odds up in our favor a notch. So the way to do that is to add the PET D. On our platform, you just simply click on the PET D, and the colors will change. And you see that it was colored green, and look what happened, 25 points in the following days. This gives you the assurance and the confidence to take the trade. Here's another one in Honeywell, okay? Here was the buy signal right here. Remember, it was 1 day closing below, not enough to tell us that the overall trend was down, and it closed back up. We have a valid buy signal, but is it a dynamic duo buy signal? We apply the PET D, and we see here that the colors now are green. Remember, we do not care what the bars were colored prior. It doesn't matter if they're all green or all red. It makes no difference. But the bar above the green arrow must be colored or outlined green to be valid. And there you have a quick 18 points. How about this example in Workday? Remember, we wanted to buy this. It met all the rules above the 50, a valid buy signal, but we didn't apply the PET D. Let's apply the PET D this time. And what color is the bar above the green arrow? The price bar is outlined red. So what is that telling us? It's telling us that even though strategy 4 generated a buy signal, the PET D is not confirming it, because it's saying the short-term trend is lower and it wants to go lower. So therefore, this is not a valid dynamic duo signal. You would not have taken, and you would not have had a 50-point potential loss. So you see how powerful this is. It not only really keeps you in these highly consistent trades, but it also keeps you out of the ones that are inconsistent. So now you know the process behind the dynamic duo. Let's share with you some recent dynamic duo signals. And the beauty of this is we're going to be using our platform, the PTS Primo Charting Platform, and it takes everything into consideration. So we've taken the hard work out of it for you so that you can learn and focus on how to trade. In other words, strategy number 4 on the platform automatically takes in where price is either above or below the 50. It takes in whether there's closing in the top or bottom 25%. So we've done the hard work for you. Even though you know the rules, it has already taken that into account. So let's look at some buy signals first of all. Remember, we looked at that example in GILD. It's going up, it's going down. This is where traders become really inconsistent. They say to themselves, well, I don't know what this thing wants to do. I'll just bypass it. Well, clicking on strategy 4, clicking on signal arrow in the drop-down menu, this is how simple it is on our platform. It generated a buy signal. So automatically it's taken into account it's above the 50-period moving average, and it closed in the top 25%, and the remaining 2 rules have been taken into account. So there's really nothing you have to do. So this is a valid signal, but what if you want to take it up a notch? What if, you say to yourself, well, gosh, I'm still not sure if I should buy this. Well, then we apply the PET D on our platform, click on the PET D, and it automatically changes the colors. Now, if this is a valid dynamic duo buy signal, what color should the bar be? Yes, it should be green. And guess what? It is. Now, a lot of students say, yeah, but Steve, the bar before was red. It makes no difference what the color of the bar was before or after. All that matters is the color of the bar above the green arrow. So this was a buy signal just a little over a month ago. And there's the 20 points in the following weeks. That's how simple it is. Now, remember, in our course, we give you 6 or 7 different ways to exit, 6 or 7 different ways to enter, 6 or 7 different ways to place your stop, as well as money management. Our job as a mentor is to provide you with these things so that you can make your own trading decisions. We give you the core of a high probability setup like the dynamic duo, but then we let you decide how you want to enter. Some traders like to enter on the close, some like to place a limit lower, some like to enter in the market the next day. It's entirely up to you. All right, here's an example in Amgen. Okay, this was at the beginning of the year. Now we see here that price is kind of going steadily lower, but then starts to head up. And what do we have here? If we click on strategy 4, click on signal arrow, we have a sell signal. We're closing in the bottom 25%, and obviously we must be below the 50-period moving average. So it's all done for us. But remember, we want to take it up a notch in terms of consistency. So we apply the PET D. And what color should it be if it's a valid dynamic duo sell signal? The bar should be colored or outlined red. And what color is it? It's green. So this is not a valid signal. And thank goodness, because look what happened after that. It went straight up. But now that the bars are green, let's look for another buy signal. Once again, click on strategy 4, click on signal arrow. And yes, we have one here. So we would not have lost any money because we would have bypassed this. And we would have taken this signal, it's outlined green, 38 points coming into this past month. Here's another one, KLAC. We have two buy signals generated right next to each other. We want to take it up a notch, so we apply the PET D. And yes, they're both green. So we could have taken either one, and in the following week, potentially captured nearly 100 points, 95 points potentially in just about 5 days. How about an entirely different market? Here's the British pound. Here's a daily chart of the British pound. It's a valid dynamic dual buy signal because it's strategy number 4, and the bar above the arrow is outlined green. So you would have had the confidence at the very beginning of March, just about a month ago, to go long the British pound. 285 pips in a couple of weeks. That's close to $3,000 per unit that you could have purchased and potentially captured using the dynamic duo. Now remember, we have some students that don't like to stay in trades that long. So we have setups and exit signals. They could have exited somewhere around here for a quick profit. We also have ways for students to stay in the trade much, much longer so that they can hold out to get as much bang for your buck. It's entirely up to you. We provide you with this and work with you so that you can ultimately make your own decision on how to trade. Not us, not some guy on TV, or it's not some guy in a chat room. You have to make your own decisions if you want to be a consistent trader. How about a weekly chart? Okay, let's look at Costco going all the way back about 2 years. All right, obviously in hindsight, this has been going straight up on a weekly time frame, right? How could we have taken advantage of this? Well, if we applied strategy number 4, look at these buy signals. Really great buy signals right at the prime place to get in. But remember, if we wanted to apply the dynamic duo, all we had to do was apply the PET D, and we would have seen that each and every one of these buy signals was colored or outlined green, giving you the assurance to go long. And you could have potentially captured 515 points in basically the last 2 years. All right, we've looked at buy setups. Let's look at some more recent sell setups, okay? Here's an example in EA. This was going back earlier in the year. Looks like we're just going sideways. A lot of you could say, well, Steve, I have that $10,000 program and class I took about institutions, and they're buying right here. This is where all the big money is buying, so I've got to be a buyer. They're holding up the stock. Well, this is why we don't rely on outside sources. We only base our decisions off of what the market is telling us. And our tools just reflect what the market wants to do. It's not based on opinion, not based on some overbought, oversold tools, just based on translators translating what the market wants to do. So the first thing is the pattern. Strategy number 4, is that pattern here? Well, we click on signal arrow, and yes, it is. But if we want to take it up a notch, we apply the PET D, click on PET D, and it's a valid strategy number 4 sell signal. Now, even though it looks like the institution are buying, all of the bars are colored red. So the PET D was telling us, even though we're going sideways, I want to go lower. And here's the pattern and the confirmation. Look what happened. The stock fell out of bed. In fact, it dropped the next day 25 points in 1 day, probably based on some announcements, some news, right? Strategy number 4 is not based on any fundamental news, not based on anything like that. None of our methods are. So how did we know? It's because the market tells you what it wants to do. It's just that we never listen to the market. We always listen to some guy on TV or some earnings report or what's going on economically. I stopped looking at that 50 years ago. So if I'm still here, as I always say, I'm living proof that you really don't need to focus on that. Here's an example in CTAS, okay? Synthesis. Stock was going sideways, then fell out of bed here. But now all of a sudden, it's starting to firm up. We have a number of days where closed up on the day, all right? Maybe some guy on TV says, hey, it looks like we're starting an uptrend. Maybe we've bottomed out. So this is where you become convinced to say, well, this guy must know what he's talking about. Maybe I'll buy, right? But what is strategy 4 saying? What is the pattern saying? Well, click on signal arrow. And it's telling us, well, there's actually a pattern, strategy 4 pattern, that's saying the market wants to go lower. And if we take it up a notch by applying the PET-D, it's confirmed. Right here, the short-term trend turned down. So we don't care if it looks like it's uptrending. All the bars are red. It's telling us it wants to go lower. And the bar below the sell signal is red. So it's telling us this is a high probability sell signal. And once again, in 3 days, 30 points to the downside. ADSK, we have a sell signal here. As you can see, we close at the bottom 25%. Remember, we're not showing you the 50-period moving average or all the other rules required because it's just one click away on the platform. All you have to do is click on strategy 4, click on signal arrow, and it automatically takes all of that into account. Now, if you click on the PET-D, we want to see if this bar is colored or outlined red. And yes, it is. So that's a valid dynamic duo sell signal. It fell 35 points coming into just a few weeks ago. Here's a 2-hour chart of the euro dollar for all you currency pair traders, okay? The market was kind of heading higher, but we have a sell signal near the highs, and it's colored red. In just about a little over a day, it fell 1,000 pips, okay? It's not a bad little trade there. How about this? We're looking at a daily chart of CDNS. Now, someone could say, well, Steve, this is a sideways market. You know, I don't want to do anything because every time I sell, it goes up. Every time I buy, it goes back down. So I'm just going to get whipsawed. Well, it may appear to be going sideways, but if we apply strategy number 4, within that current sideways action, it's actually generated 2 sell signals. Now, nothing has happened yet. Now, provided if you use our standard stop placement, you're still in the trade. But we want to make sure it's a high probability setup, so we apply the PET-D. And yes, both of these were dynamic duo signals. Now, even though nothing's happened, it's taken a good couple of weeks, ultimately, it did kick in, and the stock fell 65 points. Okay, let's recap what we shared with you today. You first want to apply strategy number 4. This is a method I have been using daily for nearly 5 decades. It's based on a pattern that repeats itself over and over again in any market and in any time frame. So there's no reason or need to switch strategies if you trade multiple markets or multiple time frames. You can always apply it. The same rules apply. It's a great, highly consistent method, but as we know, all strategies every once in a while when the environment changes may go into a bit of a slump. And so we want to add an edge to increase our odds for these signals. That edge is the PET-D. Okay, the PET-D is a color bar tool that I've been using. Once again, I developed since I first learned about it on my trading days on the floor of the exchange. A series of green bars tells you the short-term trend is up. A series of red bars, the short-term trend is down. The way we use it is as a signal confirmation tool. It confirms whether you should take the strategy number 4 signal. So a dynamic duo setup is simply, if you get a buy signal with strategy 4, the bar above that buy signal should be colored or outlined green. If you get a sell signal, the bar below that arrow should be colored or outlined red. This will increase your odds for consistency tremendously. This is one of our most popular trading methods around the world because of its consistency. And the best thing is, it's so simple to apply on the PTS Primo Charting Platform. You saw me display all of those setups today. With one click, you can see whether you have a signal and whether it's confirmed by the PET-D. So ask yourself, do you think these 2 edges I just shared with you today can help your trading for the remainder of 2025? Basically, we're already into the first quarter of the year. Okay, it's not a lot, but still, most of you are most likely not seeing the results you promised yourself that you thought you would be. Here's a way to kickstart your trading. We have a great offer for all of you taking the time to attend today's special presentation. We have a great discount. It's our dynamic duo special. You're going to get strategy 4 along with the PET D, but there's also more bonuses included. You'll not only get instant course access, but you'll learn all the different entries, all the different exits and stop placements so that you'll be able to make your own trading decision. And remember, a lot of students always say, well, I don't understand. Why don't you have the same entry, the same exit, the same stop? It's because no two traders trade alike. Let's say you have a $10,000 account. And let's say trader B here has a $50,000 account and trader C has a $500,000 account. You're all going to have different risk parameters because you know you have a lot more or less money to work with. So obviously your stop placement is probably going to be different. This will also detail where your exits will be. If you don't want a lot of risk, you want to get in and out quickly, well, that's one type of trader. If you want to stay in for as long as possible, that's another one. There is nothing wrong with either way. The thing that's wrong is when you trade based off what someone is telling you to do. So you have to make your own trading decisions. The good news is we provide you with all these variables so that you'll feel comfortable choosing one to trade with, okay? So you get the entire course rules, the automatic buy and sell arrows, and along with your PET D course, you'll also get 4 trading techniques. Now the PET D, in this instance with the dynamic duo, we used it to confirm the strategy's signals, either buys or sells. But you can also use the PET D as a standalone trading technique tool. There are 4 different trading techniques we share with you that are amazing. They're really great. Some of our students just trade the PET D alone, and they use that, and it's really great. We'll share those with you as well, okay? Now, we're also going to include a full year free of our platform so that you don't have to figure this out, figure out where the PET D is, figure out where everything is. You have to be able to apply it easily and quickly. So we're going to throw in a full 12 months free. Okay. Now, not only will you get strategy 4 and the PET D, but you'll also get auto-generated exit levels that you'll only see on the platform. Strength of trend tool telling you if a trend has more gas left in the tank or if it's running out of steam. Over 90 of the most prominent technical indicators. Also stop placements automatically seen on the platform. But here's one of the best things. We also have a signal scanner. So you can scan for nightly signals in just about all markets. Crypto, currency pairs, ETFs, all the major exchanges, futures. It doesn't matter what market. Let's see what you could have scanned for just going back this past month, okay? Here's an example in SNX. Once again, kind of a sideways market, right? If you had scanned on the night of the 20th, just about 2 weeks ago, you'd have seen that there was a strategy for sell signal, okay? Now, if you're a student of mine in the dynamic duo course, well, you say, well, listen, this is a high probability setup. It's starting to go lower, but maybe I wanted to check it out first. So you apply the PET D, and yes, it was a valid dynamic duo signal. Now, nothing much happened for the first 3 or 4 days, but then look what happened here. 35 points in 1 week. This just happened just about a week ago where it fell out of bed. Obviously, once again, as we always say, some news or some announcement came out to have it drop 35 points, but did we know that a week in advance? Absolutely not. No one called us up from the company and told us to have our students exit or sell short this stock, buy the puts. It's because the market tells you everything you need to know. And for the first time, you'll learn how to listen to the market. Remember, the PET D is a translator. It translates what the market wants to do. Here's another example, SLNO. Once again, going sideways, but this time going sideways basically on the bottom of the chart, a very kind of non-consequential, it just doesn't look like anything's happening. But we have a strategy number 4 buy signal. This was on the 24th, just about 2 weeks ago, okay? Now, to kick it up a notch, we apply the PET D and we see, yes, not only are all the bars green, but the bar, the most important bar above the signal is green. So this is telling us this is a high probability buy signal. Now, this only happened, as I said, less than 2 weeks ago. 2 days later, nothing really much happened, but then all of a sudden, once again, news announcement or something happened where it jumped up 23 points in just 3 days. If you had had our platform, you could have scanned on the night of the 24th and seen, okay, there's a buy signal. Maybe I'll buy in the opening tomorrow. I'll place a limit halfway down. It's up to you. We share with you all the different ways to do it. Now, on top of that, as I said earlier, sometimes the best trades are the ones you never take. Look at the power of the PET D here. Here was a buy signal in Google. This was just going back a couple of months. We apply the PET D, and what color is it? It's red. So it's not a valid dynamic duo setup. So we would not have taken that, and you just saved yourself a 25 potential point loss. Here's another one in Amazon. 2 buy signals were generated. Okay. They look pretty good. They're just kind of holding ground. Maybe you thought, well, we're building a base here. But if you apply the PET-D, each one of them is outlined red. So neither one is valid. You would not have taken them and potentially saved yourself a 40-point loss. Or how about MDB? This just happened about a month ago. A buy signal was generated here. It looks great, closing the top 25%. All the rules are met. But once we applied the PET-D, we see here that it's outlined red. That's the beauty of the PET-D. It told us not to take this, and we would have saved ourselves a 90-point loss in just 3 days. So not only will the PET-D confirm those highly consistent setups, it will also keep you out of trouble many times. It's an extremely powerful edge that will combine with strategy number 4 will jumpstart your trading. So take your trading to the next level with a dynamic duo. Here's how to do that. We have a great special for all of you attending. Remember, we're going to offer you strategy 4, the PET-D, along with 4 different trading techniques included, as well as 12 months with the platform. Now, if we break that down, if we didn't have this offer here, strategy 4, if you purchase this independently, would cost you close to $700. The PET-D, because it's so powerful, cost you close to $5,000, and a full year of the platform is close to $1,800. So altogether, without this special offer, we would be having to charge you over $7,400, close to $7,500. Now we know that's a little bit too much. We want to make sure that you can become a student of mine. We don't want to overprice things. So here's what we're going to do. Here's our special dynamic duo offer. We're going to discount that for a one-time payment of less than $500. Only $497. So for less than $500, you can have a one-time payment of $497 and establish a monthly payment of $97 a month. That's it. You can be up and running as early as today. Now, if you want to decide to say, listen, Steve, I can afford it. I can pay the $7,500. Well, we're going to give you a discount as well. We won't charge you $74, whatever. We'll charge you $49.95. Okay, so we'll bring it down roughly $2,500, and so that's discounted price as well. So for $5,000 or less than $5,000, you can still get the dynamic duo and the PET-D, and either way you decide to go, either paying in full $49.95 or the extremely discounted one-time payment of $497 with a $97 a month payment, you'll still get a full year of the platform. Here's how to take advantage of this great offer. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts, all the tech support. I would highly recommend giving them a call right now at area code 310-598-6677. They have trading consultants operating the phones right now. They'd be more than happy to not only take your order if you're interested, but if you're still on the fence, they'd be able to answer any question that you may have, or talk about the payment plan, or give you some more options as well. So they're very flexible. They're there to work with you. Don't feel like you're obligated if you are afraid to call. They're there to work with you, and they'll answer any question that you may have with no obligation necessary. Okay. Now that link you see at the bottom was just posted in the chat box. I would recommend and suggest going to the chat icon on your Zoom page there, because this is not a live link, but you can actually open that one up and it will present that for you live. Now, I'm going to leave this information up here. If you have any questions, just go to that chat box or go to the question and answer box, and I'll answer them as quickly as possible. Someone's saying, can you apply the dynamic duo to the E-mini or the NASDAQ 1 minute, 2 minute, or 5 minute chart? Sure, I use it on those type of charts. The only thing I would recommend or suggest, if you're going to be using small time frames like that, you should be a skilled trader, someone who's just not been trading for maybe a year or two, someone who really knows, because if you are an intraday trader on those smaller time frames, you know that you're much more susceptible to what we call noise, because that's just the nature of when you go down to smaller time frames, you have that kind of whipsaw back and forth. So with these volatile markets, this is amazing. Yes, it works great. But when the market goes into these very quiet kind of, during the lunch hour or even during the summer, that's where you can get whipsawed. So just be very careful. But yes, I use it on those time frames, or even on a 5 minute, and it works very well. But you just have to be very skilled at knowing when the market is going into those kind of whipsaw areas. Okay. Steve, I've not been trading for much time here. How can I help myself? Well, actually, I can help you. You don't have to help yourself that much. I can help you. What we do is each and every one of my students gets my personal and private email address. So if you ever have a question, you haven't been trading around a lot, and you think to yourself, I don't have enough experience, don't worry. It's the next best thing for than me just being there, sitting next to you, mentoring you. You can email me anytime you like with a question. It doesn't matter if it's next month or next year. As long as you're a student of mine, you can email me and I will answer each and every question that you have. You can send me snapshots of a chart that you're currently looking at and you want me to check your work. So I'll be there with you every step of the way. I know I've heard from students, they say, gosh, I became a student of this other teacher. And, once I bought the program for $10,000, I never heard from anybody. I couldn't contact anybody. We're not like that here. We're a relatively small company, and we really want to work with you. The difference is that we're an educational company. We're really have our goal is to educate you, not to force feed you signals and say, okay, you spend 10,000, we'll see you later. Go look at some of our, I'm just thinking of disclaimers, but not disclaimers, at some of our validations and some of our reports from people that have become students of ours and how they really like our platform, as well as how they like our methods and our strategies. A lot of our students that have been trading for years, have never been consistent, have turned in consistent traders for the very first time. So the testimonials will tell you that they really have learned a lot from what we've had to teach. And once again, our goal is not to sit there with you and tell you what to do. Our goal is to provide you with this so that you don't have to rely on anyone or anything else. I know a lot of you rely on so much outside information. I know I did. 48 years ago when I first started trading, I waited for all the earnings to come out. I waited for all the news on TV. I had tons of indicators on my screen. Each and every one of those things didn't bring me any closer to becoming a consistent trader. It wasn't until I stripped them away that I finally started to become a consistent trader. So this is what we're trying to instill in you, and I'll be there with you every step of the way, okay? Good questions. Yes, you can apply Strategy 4 along with a PET D with any market, any time frame. It makes no difference if you're trading weekly bars, monthly bars, if you're trading crypto or currency pairs or stocks. So if you like to trade multiple markets, there's nothing you need to change or alter. It's all the same, okay? Good questions. You sound like seasoned traders. Okay, remember, as we close now, give Pro Trader Strategies a call. Even if you just have some questions, if you want to get a quote about, how long you would have the payment plans for, whatever, or about tech support, what markets, what data you would have, give them a call. They're very flexible. They're there to work with you at 310-598-6677, okay? As we close and take one last look at our disclaimer, I want to thank you once again for taking time out of your Wednesday. We give these free presentations every Wednesday, but I have to admit, this is one of my favorite ones because, as I said, I use this each and every day in my own personal trading, as I have for nearly 5 decades. So I really think it will turn your trading around, okay? Thank you so much for attending today. I wish you all the best of luck, and I look forward to all of you becoming students of mine in the Dynamic Duo course. Thanks a lot. I'll see you next time. Bye-bye.